Today I'm going to be going over government budget and federal debt. The topics that I'm going to cover are receipts and outlays, deficit and surplus, government and debt, and government transfers versus spending. First, we are going to go over receipts and outlays. So outlays are going to be money flowing, quote, out, which you can remember by out being in the word outlays, and that's flowing out of the government. There's two types of outlays, being mandatory outlays, which is government spending that is required by existing laws, such as Social Security and Medicare, so unless there is specific legislation passed, those cannot be changed. And there's discretionary outlays, which is money that is approved every single year by Congress and that changes every year, and then amount that is spent on certain things such as defense, education, and public transportation. And then receipts are money that is coming into the government as revenue, which is almost always a type of tax, whether it be like corporate tax, income tax, various things like that. Next, we're going to be going over government deficit and surplus. So they are actively the opposite thing. Deficit is when the government spends more than it brings in, so they just are in a deficit. And surplus is when the government spends less than it brings in, so they have a surplus of money. The equation to determine that is going to be S for savings equals S for savings is going to equal taxes minus government spending minus transfers. So you can find if that is positive, then you will have a surplus, and if that is negative, you will have a deficit. And then government debt is going to be the amount of money that the government is required to borrow to cover their outstanding balances. So the government is going to spend so much every single year, and they will have accounts that they need to pay off, and that is going to be the government debt. And to calculate the public debt, which is also another way of saying government debt, you just add together all the government deficits over the years. And last, we're going to be going over government transfers versus government spending. So transfers are when they move money around to other government programs and they aren't expecting anything in return, such as like a stimulus check that happened for the CARES Act over COVID, or like they transfer money, they fund education and public transportation, they put money into these things, but they're not expecting a revenue in return or a good or a service in return. Well, spending is pretty self-explanatory. It's just as the government spends money to buy things. The government's going to have to pay utilities on their buildings or various things like that. And to calculate spending, the aggregate expenditure is equal to C, which is consumption, plus investment, plus government spending, plus net exports, which is exports minus imports. And that's just going to give you your total spending.